Okay, I think it's going. Yes, it says live. Okay, sorry we're a few minutes late. We had to pause and make some tea, and there is a really, really good chance that our 3-year-old is still awake. So she may come running in here. But I was gonna wait for a couple people to jump on here before we get started. And I'm actually gonna grab the laptop too really fast. So how's everybody doing tonight? It's super fun tuning into webinar at 9 o'clock, isn't it? And we normally look this good at 9 o'clock at night. Don't worry. We always look this good. All right. Well, real quick, my name is Mary DeCrescenzio. If you didn't know, it is pronounced DeCrescenzio. And this is my husband, Vince. We are celebrating 10 years of marriage this June. And in the last decade, we have been through me just having a business, but also he was in the Marine Corps for 4 years, and then he went and got his CPA. And now I'm going to let him talk about himself for a few minutes.
Okay. So I'm glad to be here. So basically, Mary asked me to come on and talk a little bit about setting up a business, accounting, finances, taxes, budgeting, things that some people think are useful, some people think are don't, but if you start to implement and use some of these things, it can really change your business and how you work and operate and make money, and hopefully make you more successful. So hopefully I'm able to answer some questions and provide some advice on things that I know, and maybe questions I don't know, able to get back to you on those.
So do you want to start with the questions that were submitted, I suppose? Yes, here.
On your big computer?
Pull them over my big computer?
Yeah.
I suppose I can do that. So for some reason, oh no, there's the comments. Okay, I was like, for some reason the comments are showing up on Facebook, but like on the laptop, but not on the big computer. But again, I've never done a live video on my page, so this will be interesting to try out. I linked. I'm not using a laptop today. Hello, everybody. Okay, sorry, I'm trying to pull up this document. I thought I pulled it up on the laptop. Barely, that wasn't what he wanted. All right, well. Why don't you just open it on the laptop? I don't understand. Like, okay. That was very difficult because, you know, he can't just look at one screen and look across. He's got to have. Oh, thank you, Melanie. Yeah, I just did my makeup like an hour ago because I haven't gotten out of my PJs, like, if I'm being completely honest. And what's great is he literally just sent me this email like 4 minutes ago. So that's why I'm having a hard time pulling it up, because I don't. And now I just opened the wrong thing. There you go. There's a picture of my friend. Why can't you just use the laptop? This is what marriage looks like. All right. Got it.
Okay.
Okay.
So first of all, little disclaimer. While I'm a licensed CPA, I'm not your CPA. So anything I say, you know, don't use it as fact. Laws regarding small businesses and taxes are different for every state, so they may differ. Talk to a licensed CPA or attorney if you really, before you really make any business decisions. This is strictly for informational purposes. So first, I want to talk real quick about a simple guide to kind of start up a creative business. So Mary's been in business for a long time, and she has learned things, and I've learned things with her that have really helped us, and things that we didn't do that kind of helped teach us from our mistakes. So first, choose a name. So when you do a business, you choose a good name as far as like, what do you want your clients to perceive you? So Mary went through a name change. When she first started her business, it was Kaylin Tinsley Photography, and that was an awesome name because it was after her dad. It was after her passion to start a business, but it was really tough for people to understand that because her name is Mary DeCrescenzio, completely opposite. So it was hard for her to really establish her brand when it was separate from her name. So something to consider is just have a good name. There's not a wrong name, just something to consider first. The second thing, especially if you're a small business in a creative group, is proprietor against doing an LLC. So sole proprietorship versus LLC. So generally, LLCs are good if you have your own home, if you have a lot of assets, if you're going to participate in high value photography type stuff. You're going to do commercial models, celebrities, those kind of things that maybe look for things that you could have suits and stuff like that for. Generally, though, you don't need an LLC if you're not making a ton of money. I think less than $50,000-$80,000. You're probably generally okay being a sole proprietor. You just do generally smaller contract photography stuff. But there's plenty of stuff out there on Google. Definitely look into an LLC versus non-LLC. There's all kind of benefits and things to consider. So the third thing, is to get an EIN. So that's easy. It takes about 5 minutes on the IRS website. If you're not sure where to look and you can't find it on Google, just shoot us a message and I'll send it over to you. Number 4, and very important, is to separate your finances. So this is extremely important. I would first thing I would do is establish a separate business checking account, and this is just so you could have everything separately. You're able to maintain it. It just makes a lot more sense. Something that Mary's always had, a separate checking account. You just have your joint account, as we have a joint account being married, but having a separate business account, and then you could have another one too. We'll talk about budgeting in a little bit, but definitely separate your finances. Number 5 is register to pay sales tax. So sales tax is extremely tricky when it comes to photography and just other creative services. Yeah. Photography has some special tricks, but you got to consider sales tax. A lot of people forget about it, especially if you're smaller, but really come back and bite you in the end. So we'll dive into that a little bit more. Number 6 is just taxes in general. So sales tax is one, income tax is the other. So you pay income tax at the end of the year, April 15th for your previous calendar year. So something that a lot of people I've talked to in small businesses that completely forget about income taxes is you're working the whole year, you're making money, and at the end of the year you get a $5,000 tax bill and you have no idea why. Well, you forgot to pay quarterly taxes throughout the year. So I work for a company, I get a W-2, I get a paycheck, and there's a little bit they're taking out each paycheck for taxes. It's pretty simple if you own your own business, no one's going to take out money from your account to pay your taxes. So what I would recommend is maybe every time you get paid for something, especially a large contract stuff, take 20 or 30% of that, put it into a savings account. And I would actually have a whole separate savings account called a tax savings account. And then every quarter, go on the IRS website and pay a quarterly tax, estimated tax. Your first year might get tough, but it'll get easier as you go of getting what an estimate of your estimated tax are going to be.
And I do want to add one thing.
Yeah.
One of the greatest things that has worked out for us is that Vincent has a high withholdings on his paycheck because I was really bad about the quarterly and year-end taxes, just mentally, because, I mean, he does it for me. But since we were married and we do have joint finance in that way, he does withhold a ton. So at the end of the year when we're filing, we're not completely, thrown for a loop. Yeah. So if you're in a position where your spouse can withhold more, they're willing to, you might want to sit down and talk about that.
Yeah, that definitely
helps.
Great. That definitely helps. But if you're by yourself or if you're not able to do that,
or you don't want your spouse to help you.
Yeah, sure.
We don't judge.
Definitely don't forget about income taxes and get surprised at the end of the year when you have to pay a couple $1,000s for that. Number 7 is insurance, and that's an optional thing, but something you should consider. So let's say you don't have a savings account, you spent $2,000 of all your money you had on a brand new camera to start your business, and you're out on your first photo shoot and you drop it into a river. Well, that's kind of tough when you have to replace it. That's how you make your livelihoods. But having insurance is, a couple of dollars a month, definitely a good investment, especially if you don't have a buffer kind of savings account. You should consider it. It's not something you have to have, but just something to consider. And then kind of a step number 8 is everything must go in writing. and it's something that Mary is definitely learning the hard way too. Contracts, definitely. There's easy contracts online, very, very simple ones that are free. You could pay for some that are pretty inexpensive, but definitely get a contract. Be very thorough. If you have an attorney, review it if you can. This could be relatively inexpensive, but and if it a couple $100 could be a well worth investment. So contracts, definitely have those written down, and then kind of keep everything in writing. So what I would suggest for anybody to do is monthly, at least monthly, if not weekly, to go through and kind of go through everything you've done in your business. So if you've spent money on office supplies, marketing, websites, keep every receipt, and at the end of the month or the end of the week, you have everything together and you're able to put it together in an Excel spreadsheet. That's what I would do. There's plenty of ways to do it, but set aside the same time every week or every month. So, Wednesdays at 3 p.m. or whatever works for you, Fridays, just same time every month. You should have that hour, and so you don't get behind. Because at the end of the year, when you have a big stack of shoebox receipts, that can be really tough to go through, and you can miss hundreds or thousands of dollars in deductions of things you're missing. So.
Well, and one of the questions we got was, what's the best way to keep up with it? I know that programs like HoneyBook, 17 Hats, and I always say it wrong, but Dubsado do a really good job of kind of tracking your money and your spending. But it looks different for every single person. That was the only thing I could say to that question was, like, for me, I have a drawer and I put receipts in there, and then usually once a month I divide it up into a file folder. It's not pretty, but it's effective. One thing that drives him bananas is that I am not an expert at Excel. I'm okay with that. And I use Excel to very elementary style, keep my sessions and weddings and my second shooter contracts and all that stuff organized that way. And every time he sees it, he's like, this is how you track your money.
Yeah,
okay.
Yeah.
Great. But at the end of the year, our taxes are fine and we're good. So it looks different for everybody how you want to organize it. I don't really think Vincent and I can offer don't have the shoebox, have a drawer, don't have a drawer, use a CRM program or whatever. It looks different for everybody. But definitely keeping up with it every month, every couple months will make it a lot easier. So you're not like me a month ago when he asks for all the information and you're scrambling to write it down on a sticky note.
Yeah, but thankfully for Mary, though, she has a CPA on staff. That comes relatively cheap. So
I don't pay him.
Yeah. So, but if you don't, it could be just a couple $100 that you save by getting all the stuff organized yourself. So, definitely something to consider. And it's just better for you, so you know how you're going along the whole year. So, does anybody have any questions?
My mom does.
Okay. So,
right here.
Social Security disability. Okay, so someone asked a question about Social Security disability.
My mom.
So with Social Security disability, there's a minimum amount that's not taxed, and then once you get, I don't know the limits off the top of my head, but once you get over a certain amount, that amount is taxed, and it's pretty limited. But most people don't pay tax on Social Security, and if they do, it's because they have other income sources. That's just a little bit about Social Security and disability. So let's see. So something I definitely want to talk about, this is one of my favorite things to talk about, I hope other people like it too, is retirement. So retirement is huge because, so I have a job, W-2 salary. I'm in a 401k plan. My employer takes a couple of percentage of my paycheck, puts it every 2 weeks. I never have to think about it, never have to do anything about it. But if you own your own small business, no one's going to do that for you. So you have to consider retirement, and you have to think about it now rather than when you're 30, 40, 50, 55. You need to think about it now. So retirement is huge as far as if you save more now, compounding interest. I don't need to go into all the details, but it's a lot easier to save now than start saving when you're in your 40s and 50s. And a lot of things people consider about retirement is whether doing a traditional or a Roth setup. And people are kind of confused about the two terms. So you could have an IRA and a 401k, first of all. So those are the two different things. 401k is employer-sponsored. IRA is individual retirement account. Those are two different things. So 401k, IRA. Now they both could have a traditional or Roth setup. So whether I could do a 401k or a Roth 401k. Mary could set up a a traditional IRA or Roth IRA. Same thing, just depends on who sponsors it. So the big difference is traditional, you could contribute with before tax dollars, and a Roth, you contribute with after tax dollars. There's benefits of both. I'm definitely a fan of the Roth myself. One thing to consider is as investments are growing, you're early saving for retirement, in your 20s or 30s, all that interest that's growing in your retirement account is going to grow tax-free. So if you're in a higher tax bracket situation, maybe the traditional makes sense, but usually the Roth 401k or IRA makes more sense. So definitely start now. Go online. There's plenty of places you can do it. I do it through USA, but you do it through Fidelity, Vanguard. Just a couple bucks a month, $50 a month. Or whenever you get paid for a wedding, just put $100 aside, or you get paid for a new gig. Just put a little bit aside each month or each time you get paid. It's definitely better to do it now than later. So.
Yeah, and we actually, the startup for his retirement started when he was in the Marine Corps. So that kind of gave us a really great base. So that when he was medically retired, we were able to transfer that over to a Roth IRA. And again, it's different for every family. Vincent does have a traditional type job where he goes into the office and he has a CEO and all those fancy acronyms. But I do work for myself, and I have a second shooter here and there. But again, it looks different for every single person. But the greatest thing we can say is that if you start now, it's going to benefit you so much more, because we actually recently looked into a Roth IRA that my dad had opened 20 years ago. No, 20 years ago. I'm about to say 30, and I'm not that old. So, and just to see how much growth there was when he just put, so much money into it 20 years later, he didn't even touch it because he passed away a year later. It's just incredible. But we do have 2 questions, and I'm going to answer those before I forget. Did you read them?
Sure. So,
so Jessica
asked about FICA taxes. So, FICA, good question. So, FICA is unemployment and disability. So, those things are made up of FICA. So, if you're paid with if you work for an employer, your employer pays half of the FICA, and you pay the other half. It comes out of your paycheck. So 7.5% for the employer and the employee. If you work for yourself, that's you don't have a paycheck. So that's where self-employment tax comes in. So I'm not going to bring out the face of your tax return, but on the first page of your tax return, you have to pay a self-employment tax on top of your income tax, and that's where FICA is as far as small businesses. So it's you don't pay FICA when you own a small business, but it's the self-employment tax is basically the same thing. And
how often do you pay that? Is that
that's yearly when you file your income tax return.
And then Antoinette asked, what is the basis for an IRA if employer makes all the contributions?
Good question. I'm not 100% sure. It's probably just the amount that was contributed as far as the investment, not the growth. Not totally sure on that, though. I would have to get back to you.
So I can definitely private message you to answer that too, because I know you had another question that you'd submitted to. But do you want to talk about taxes next?
Sure. Well, real quick. So someone asked questions about savings. So the best type of savings account, especially for kids and for future savings. So I would definitely recommend looking into a 529 plan. Most people know about it or have one. But it's a huge benefit, because like with an IRA, not a Roth IRA, but with a regular IRA, if I contribute $5,000 now, when I retire and take that money out, I have to pay taxes on the $5,000 plus all the growth. With the 529 plan, if I contribute $5,000 to it of after-tax money, and Mila's gets ready to go to school, that same $5,000 is $15,000 when she turns 18, all of that money she uses to go to school. The penalty, if we want to take it out and buy a boat or something, I'm not going to buy a boat, but but one thing, a
world cruise,
maybe. But let's say for one thing, let's say what if Mila's really smart, hopefully, and she gets full scholarships, and we have to use any of that money. Well, there's no penalty to take the money out, because you could offset it versus the scholarships. So there's really not much of a downside for a 529 plan. It's best to start now if you have kids that are young, but it's never too late to start. So any questions about that? Let's see. So just
because that savings question was submitted, I think, through my Tuesdays Together group.
Okay.
And for those that are local to Greenville, for those of you that don't know, I am a co-leader for a local group of creative entrepreneurs, and we meet once a month, typically the second Tuesday of every month, and it's a time of networking, but also a time of education. And Vincent's going to be at our, so you turn your coffee up so people can see it. Vincent's going to be at our meeting in March to kind of do one-on-one talks and chats with people in regards to taxes, retirement savings, all that like financial nitty-gritty that, you know, for like people like me, we don't want to talk about. But he will be there. So if you have any questions or you want to be added to the group, it's called Tuesdays Together, Greenville, South Carolina. We'd love to have you, and he will be there in person and can answer questions a little bit more effectively than live, because it's 9:25 and we need to go to bed too. But he is going to briefly touch on taxes and some business plans tips.
So the business plan, I'll just go through that really quick. So someone asked a question about what do you need towards opening a storefront? So great question.
Yeah, it was Gracie. I'm going to tag you, Gracie.
So I'm probably the wrong person to ask for advice for that, because I've never done it or never haven't looked into it. But my biggest recommendation is try to talk to as many people as you can, even if you don't know someone. So I've had to make decisions in the past, and I'm an introverted person. I don't like to talk to people, but if I want something, I'm gonna set my mind to it. Nothing's gonna scare me. So I reached out to random people. I had no idea who they were. I didn't know their friends or anything. Just found their information on LinkedIn or Facebook or something. Knew what they did and reached out to them, asked them questions. If you reach out to 5 people and hopefully 3 people respond, usually people love to help you. So, I don't know about opening a storefront. I'm sure other people do. So talk to as many people as you can and just plan. That's my biggest advice there. So taxes, real quick. If anybody's any other questions, okay.
I don't think so.
It's okay, cool. So taxes. So
wait, hold on. Oh gosh, here's my mom. If you are in a contract agreement renting a space at a shop to sell crafts or something like an antique mall, do you recommend establishing an LLC? At what point? At startup or after it's established?
Yes. So yeah, definitely.
This is obviously
we're definitely an LLC, and I'm taking care of that.
Yes, so, Mom, he's got your back. It's fine.
Yeah, so definitely an LLC just to be safe.
I think that was Mila.
Yeah.
We're just gonna ignore her.
Just ignore her. Okay.
She's cute. You like her.
Yeah.
So we're gonna talk about taxes real quick, because this is, I think, where a lot of people get really stressed up and hung up on, especially as creative small business entrepreneurs. We kind of just get a lot of information from all different directions, and if you're not in a place where you can hire a CPA or even go to someone that can prepare your taxes for you, Vincent's gonna give you a little bit of information, some tips there. If you have very specific questions, though, you can definitely message me. And he'll do his best to answer those through my Facebook page. But we'll go ahead and do some tax talk real quick.
So 2 big taxes that small businesses should consider is sales tax and income tax. So sales tax is often forgot about. Income tax is a little more common, but sometimes people don't think about it. So the income tax thing, I touched on it briefly before. So what I would recommend is everything you book, maybe a month, or if you're a photographer, maybe a big wedding that you sell for a couple $1,000s, you take that money, put 20 to 30% aside in a separate tax savings account, and then quarterly you take that money and pay estimated payments. So when it comes to tax time, you're not surprised with a couple $1,000 bill. And then someone asked about the best way to organize tax paperwork throughout the year. So I think I touched on that briefly. Just create a system and stick to it. Have something throughout the year where you're either filing it away or I love Excel. So just put something in Excel, have a separate tab for marketing expenses and traveling and this and that and this and that, and just keep up with it. That's the biggest thing, is just keeping up with it. And most people don't know this, but keep all your tax returns and all the supporting documentation for 7 years. So if someone writes you a check and you deposit it, keep the check, write void on it, file away with your taxes, and keep it for 7 years. At least. You can keep it for longer, but I would just, to be safe, keep it for 7 years. let's see. And then some other things to consider. So I'll write some things down here. So a lot of people forget about tax deductions that they're like, oh, it's not a big deal, but little things add up throughout the whole year. So if you're driving, mileage and auto expenses, there's two different ways you can do it, either through counting your actual mileage or your gas receipts. So there's gas receipts plus upkeep costs as far as oil changes. So whatever you think is best, there's two different ways to do it. But just track it throughout the year. And there's tools and apps and stuff.
Yeah, Mile IQ is a popular mileage app. I'm not responsible enough to do that. I just keep receipts.
Just gas receipts, yeah. So whatever you think is best. So another thing, equipment. Any kind of equipment you buy for your business, whether it's large or small, whether it's a camera, a computer, or a memory card, or batteries, just track it all down. Another thing, supplies. So paper, envelopes, pens, everything, all that's deductible. Meals and entertainment type costs. So half of that is deductible. So if you're taking a client out for lunch and you're talking about business during that time, you could deduct half of that meal. And then entertainment, you can for last year, but actually there's new rules in 2018, the new tax law that just came out. You can no longer deduct entertainment. So just include a meal with every meeting, whether it's food or liquid, and you could deduct half of it. So that's meals and entertainment. So,
I thought I could write all those terms. We saw The Greatest Showman.
Yeah, I know. Popcorn, so you can.
Oh, okay, cool. So
Yeah,
that was a business meeting. He's my
business.
CPA, and I took him to see. Duh.
Totally.
That's
Yeah.
not how it works.
Conferences, education, associations, all that kind of things you pay for, that's all deductible. If you're paying for an app like HoneyBook or QuickBooks Online, all that is deductible. If you're paying for tax prep fees, all that's deductible. Contractors, employees, all that's deductible. Home office deductions. If you have, we're here in Mary's office, so this part of our house is only her office, so this part of our house is deductible for our tax purposes. Film costs, like camera costs, things like that, development, that's all deductible. Client gifts up to $25 is all deductible. So don't forget about any of those little things, so they all add up throughout the year. What I would do is anything you spend for your business, just keep a receipt, keep track of it, and then if you see an account at the end of the year, they'll go through it and help you decide whether something's deductible or not. So,
well, and Melanie, I was actually going to have Vincent talk about that. So I went to Vegas last February for WPPI, and there were certain parts of that trip that I was able to write off because of the conference side of it and my plane ticket.
Yeah.
But then in September, I went to San Francisco. And while I did do a second shot an engagement session at Yosemite, it technically wasn't like a business trip for me. So do you want to touch on like travel, plane tickets, stuff like that?
Yeah. So,
or if it's like personal little travel and you take a session, how does that work?
Yeah. So if for example, if we went to Disney World for a week and she had one photo session she squeaked in, we can't run off the whole trip to Orlando for a business expense. That's not how it works. But if a majority, you could write up a proportionate amount of your time. So that's how it works. So if she spent 5 days in Vegas and all the meals that were related to the conference and her flight or in her hotel, all that is deductible as far as a business expense. If we go on a trip together and 4 days of it is in her doing business, then we say 2 extra days, then those first 4 days are deductible for your business. So just whatever proportion amount you spend on an actual business trip, that's deductible for your business.
Well, my second shooter and I went to New Hampshire last July for a destination wedding. But the client covered all of our expenses, and they covered my plane ticket, our food, our rental car, gas, everything like that. So I actually really didn't get to write off anything from that entire trip because the client covered it. I didn't come out of pocket for that particular trip. But this is interesting. I don't know if you mentioned that or not, but I was not aware of this. So if you're like a photographer or someone that has a not necessarily has tangible products, like you might be a baker or even a wedding coordinator, you may have client gifts. Actually, I need to put some tissue paper in. That brown bag right there is actually a gift for my October bride that I'm meeting with Wednesday. But that is a client gift. And according to Vincent,
according to the IRS, it is, you can only deduct up to $25 per client per year. So definitely consider that as well.
Well, and I've heard, this was years ago, so I'm not going to mention who it was, but a pretty popular photographer made a comment about she uses, I think, 5 or 7% of what her clients pay her to put back in towards their client gift. But if you're charging $8,000 as a wedding photographer, that's actually a really high percentage. So just be aware that now it is up to $25 per client per year.
So, and a lot of things what I'm saying with these deductions. So definitely follow the rules. So you might be able to sneak by, but if you get caught doing something wrong 1 year, you're going to get, it's just not worth the trouble to save $10 in tax. It's just not worth it. So just stick to the rules, do things right. So that's as far as deductions. Just basically keep up with everything you spend for your business. And that's where the separate business account I talked about really comes into play. Because then if you forget, you could go through every single bank statement you have for the year and just make sure that everything's included.
Yeah. Well, we're going to wrap up in a few minutes just because I promised it would be less than 30 minutes. We just hit the 31-minute mark. I do want to just touch on something really quickly. So when Vincent and I got married, I had not started my photography. I started it 2 or 3 months after we got married. And at the time, I actually decided to go to Bank of America, open a separate bank account. And I actually gave Vincent a debit card to my business account, but he did not have any access other than swiping that debit card. And then as years went on and things changed, we actually combined all of our money into one account about 4 years ago, probably right around the time Mila was born, when I decided to take a little bit of a step back. About 2 years after that, we realized that was not going to work and that my photography money needed to go into a separate account. And then what I personally do is the money hits my account, and then I ask my accountant, where does it need to go? Does it need to go to savings? Does it need to go to any debt? Does it need to go, where does it need to go? And I feel like I need to mention this, and he's going to hate it, but sometimes you kind of have to have a little bit of transparency in order to be just like a reliable witness. Vincent and I have been married for 9.5 years, a little over 9.5 years. And I would say in the last 12 years that we've been together, we have paid off between cars, timeshares, credit card debt, and other kind, probably close to $250,000, $300,000 in debt. And I don't say that in like a bragging way. I say that in we made some really bad decisions. And yes, him going to school and getting his MBA and his CPA has definitely helped us out tremendously. But the biggest thing and the greatest advice that we can give to y'all in terms of marriage, small business, whatever, is if you start getting into debt problems, you need to address them head on. So while your savings account is important, your retirement is important, we spent the last 2 years, probably up until like a week ago, paying down debt, like aggressively. Every penny I made for the last 2.5 years has gone towards paying down debt. And now we're at a place where I get a paycheck and I get to enjoy it, and we get to go do stuff. We get to fix stuff around the house. We get to go on vacations. So in terms of that, just make sure that you have your head on straight in terms of like the legal side of it. Like make sure you're registered and you have your EIN and all that fun stuff, but then really come up with a plan. I know that a lot of people are huge fans of Dave Ramsey, and we took his course like 6 years ago, and there's some parts of it that just didn't work for our lifestyle. Like I'm not getting out of the car to go pay cash for gas because I have a 3-year-old and I don't want to do that. But pick a plan that works for you as an individual, works for you as a business owner, and works for you as a couple if you are a couple. And I saw that Jesse commented. Let's see what he said. I've gotten a ton of mixed results when talking to people about what kind of licensing registering as a business, as a photographer. I have no storefront and live in Greenville County, not city, and no studio is in my home. What do I need? That might be for tax filing.
Well, you need a business license.
You need a business license for Greenville County.
Yeah, definitely.
And then you need one for the state of South Carolina, I believe. And then depending on where you shoot, you definitely have to be careful about permits. I want to say it's like West Columbia or Casey or something down in the Midlands that you actually have to have a permit to shoot in these smaller towns. So if you are, going to Westminster, or you end up in Anderson, or you end up in Travelers Rest, like you need to make sure that those cities don't have special permits and restrictions there. I am registered in Greenville County. I'm also registered in Richland County. And then for the state, I don't have a studio and I have no storefront, and I do not give tangible products. So I do not have any issues with sales tax.
Yeah.
What is it? Yeah, sales tax. I hope that helps.
Kind of real quick on what she touched on. So last thing before getting into taxes is budgeting. So budgeting both from a personal and business standpoint is very, very, very important. For your business, it just helps you decide of really looking into numbers, where you're going to go, where do you want to go, what money do you have to put where, rather than just getting cash in your account and spending it and forgetting about taxes and forgetting about this and that. So there's all kind of budget templates online that you could use, but budgets are extremely, extremely important, both if you're making $5,000 a year or if you're making $500,000 a year. You just have a budget and figure out where that money's going to go.
And again, everyone's looks different. We are at the stage, I would say probably in the last 3 years, where I don't need any more equipment, and I have not been setting aside money for that. Whereas I have some friends that are at the beginning stages of their business, so every penny there that they have to spare, instead of paying themselves, they might be using it to buy gear or something of the like.
Okay.
So
we talked about income tax a little bit. So real quick, I want to talk about sales tax. So sales tax laws are, in my opinion, much more complicated because obviously every state is different. Jurisdictions are different. Some cities charge sales tax. So it's kind of tricky. And a lot of people forget about sales tax, especially if you're a small business and you're just doing a service like photography, or you're just starting out, you forget about sales tax. So some things to consider is if you're in the state of South Carolina and you sell any kind of product, you have to pay sales tax. And so the South Carolina laws, because I know South Carolina laws just particular. So if we have a wedding contract that's $3,000 and the bride and groom, all they get is a flash drive, because that's a physical product, you have to pay sales tax on all $3,000. If they want to add, if they want to pay you $3,000 just for the wedding and they get an online gallery, then no sales tax. But $3,000 for a wedding online gallery plus $100 for a book, then all $3,100 is sales tax. You have to pay sales tax on that. So the laws are very, very, very tricky on, especially when it comes to services and when you're bundling product with services, especially on photography. That's what I know a little bit about. And
so if you're like a baker and you charge $500 for the cake, like you charge.
Yeah.
Okay.
So when it's easy when you have products. So when you're a baker or when you're selling art, things like that, you need to pay sales tax. So
whereas like a wedding coordinator or day of coordinator wouldn't have to worry about that because they're not necessarily providing a tangible product.
Exactly.
They're providing their services and their knowledge. Unless I can't think of anything to it.
The wedding coordinator?
Yeah, I don't know. I have some coordinator friends now. I need to ask them.
But something that Mary started doing a couple years ago because of this was she doesn't really give an option to do a flash drive or any kind of products. Good or bad, it's just a business decisions that she made that we made together to not have to worry about sales tax, to not have to worry about doing any of that. So it's something to consider to do an online gallery, not a flash drive. Then you have to worry about sales tax. But every state is different. Another thing to consider. So if the bride and groom, let's say they're in North Carolina, if it's a photography standpoint, and the wedding's there and everything's there, then obviously you don't have to pay South Carolina sales tax there, but you need to look into North Carolina rules. If the wedding is in North Carolina, but they live in South Carolina, and then you mail them their book in South Carolina, then you have to pay sales tax on the whole thing. So the rules are very, very complicated.
Across state lines.
Yeah, across state lines, it's very tricky and very detailed. Usually, if you want to be safe, you could just charge sales tax on everything and pay it monthly. The actual sales tax return is pretty easy. For South Carolina, there's an online portal. You go in and you put an amount, it calculates tax. You pay it monthly. It's or quarterly. It's pretty easy. So there's definitely some tricky laws around that. But you can't forget about sales tax. Income tax is important, but I think sales tax is equally important when it comes to mixing services with a product-based business.
And Antoinette had this question. I don't know if I sent it to you.
Okay.
If anybody else has any questions, they're welcome to kind of shout it out. We kind of did the outline. He kind of set out and answered questions that have been submitted previously through Instagram and Facebook. But if anybody else has any questions about taxes, retirement savings, budgeting, Go ahead and ask.
Yeah. So
someone asked
a question about filing taxes in South Carolina. So all they earned was $200 in South Carolina. So, and they moved from Pennsylvania. So they should have filed a South Carolina return. Well, this goes for any business. So let's just say I started my business on December 30th. I made $100. Should I pay tax on $100? Well, technically, the IRS rules say you have to pay tax on any dollar you earned, no matter where it was. So not only would I pay South Carolina tax, but I have to pay federal income tax on that $100 I earned. Hopefully with deductions and stuff, it's minimal or zero. But if you made money, you should file a tax return and pay tax on that, just to be safe, because you don't want to get audited and have to go back and pay interest and penalties on that missed tax that you didn't file 5 years ago.
So you have to file for each state.
Each state, yep.
Oh goodness.
Yeah. So thankfully, with going to a CPA, if you have a complicated tax situation, you want to go to a CPA, someone that has a lot of experience doing this kind of thing, or at least seek advice of someone. And if you want to do it yourself, just make sure you understand all the rules and regulations that go into it. But it can get tricky when you get into a business and you have a lot of deductions and things are starting to add up. So definitely consider that.
Yeah. So the first year Vince was in the Marine Corps, I was a senior in high school, and I managed his credit card and bank account. I did an okay job for a senior in high school's level of knowledge. And then the first year and a half we were married, and first 2 years we were married, we filed, I did all the taxes. And y'all, it would take me a whole month to file because I did not understand filing as a small business and as a sole proprietor. And just when he decided to go back to school and go for accounting, I was very grateful. I gave him all of our tax documents and I gave him all of our passwords, and I was like, good luck, have fun. You're going to make mistakes along the way. Money is always complicated and tricky. It's never going to just be cut and dry. But if you do have questions, Vincent's willing to help to some degree. Like, he does not do small business taxes. He works for a software company currently, and he has public accounting knowledge. But he's just doing this because I asked him to. Yeah. And I have a lot of friends that I know would like advice, but don't necessarily know where to go. So I just drag him everywhere I can, and he makes me. And he's pretty nice to look at too. Well, if anyone else has any questions, we're gonna go ahead and sign off because our daughter actually, I think, is in bed. We heard a plate clamoring earlier, but I think she probably ran back and hid. But if you have any questions or you think of anything, feel free to private message me on here or on Instagram on my personal page. Sorry, my best friend just commented. I'll just read what she's saying. Yeah. And it's okay to ask for help. I think that's the biggest thing because we didn't for so long. And it's incredible how much knowledge Vincent has got just from going to school, but then also from being in the workforce. So it's complicated. He does not give photography advice because that is not his area of expertise.
And if I did, I would listen to myself. So.
And I give accounting advice, but it's because I'm literally like spewing what he has told me verbatim. There's no actual accounting and tax knowledge up here other than what my dad taught me when I was 9. So thank you guys for tuning in. Thank you for all the questions. Again, if you have any more questions or can think of anything you need to know later on, just shoot me a message.
Thanks.